Okay, welcome to another training session with 123 Bookkeeping Solutions here in Austin, Texas. Today we're going to be talking about items, and we're going to be dealing with the basic nature of items, utilizing both the QuickBooks Desktop and the QuickBooks Online version of bookkeeping software. But, any kind of bookkeeping, tracking, type of software, items are going to be treated, they are what they are. They're just things that you sell to make money. And what I mean by things is they are services or products. Every business sells a service or a product. I'm a bookkeeping service, so my services are bookkeeping, could be bookkeeping services, could be bookkeeping consulting, could be payroll services, could be hosting services as well. Okay, those are my major services that I provide to people. But if you're let's example as a retailer, you're going to be selling products. Okay, so in QuickBooks Online here, to get to your product, get to your service product item list, or just get to your item list, we just click on this little wheel icon, and then we just go to our list, and then we go to products and services. Okay, so it's pretty simple. So for this particular sample company, these are all of their items that they purchase or sell as well too. This column right here is the type of item that they purchase and or sell. This is a service type item. These are inventory type items. Okay. Going on down the line here, they basically have service and inventory type items that they sell. So this one is pretty clear. And if we double click on it to kind of delve into it, particular item, let's go ahead and delve into the service item right here. You can see that, here's the name right here. And then, the category that you wanted. In other words, this is just basically saying this is a sub item of designs. Okay. And then I sell this product to my customers. So you're going to say, okay, yes, I sell it, so I want to book it to an income type account every time I sell this particular item, okay, this particular service item. So this is a design. They design fountains, okay. They want to make it taxable when they create an invoice for their customer, and then they don't purchase this from anybody. In other words, they don't subcontract this out to somebody, okay. So they do not check mark this box right here. So this is what they call a single-sided item. Single-sided meaning that they're only using this item all the time, only for income type account, only for sales. Let's put it that way. Okay. This item could be made double-sided if they wanted to actually, this particular example, if they want to subcontract this out to a designer, to a professional designer, then they want to turn right around and bill their own customer, okay, for this, okay? So this is what we would make a double-sided item for. If I check mark this box right here, and I decide that I'm the owner of this company, I want to go ahead, I don't feel like designing anymore. I just want to subcontract this out to a professional designing firm. No problem. I just purchase this product or service from a vendor, and I just say, actually, this is a concrete for fountain installation. So this is part of their design work right here. So, just keep it really simple. I'm just going to copy and paste it down here as well. And then I want to, when it actually sells, when I actually purchase this from somebody, I want to book it to the right purchase account, okay? I would go ahead and use cost of goods sold in your items because this is a direct cost that you incur to actually sell your items, sell your goods later on. Okay, goods meaning services or inventory. Okay, so anything that's direct, I would put into a cost of goods sold type of account. Okay, and that's it. I could be a little more, how should I say, detailed on my cost of goods sold. I could create some that say concrete, for example, or materials. Or you can create one called, labor or something like that. I always keep my COGS accounts, COGS, COGS, cost of goods sold. I keep them pretty simple. Labor, materials, other, on and on, merchant fees, so forth and so on. So in this case here, let's just keep it super simple. It may not help us best managerially, but for our example here, you get the idea. And then if I want to go ahead and throw in an actual prices that an invoice and a bill will default to, I can put that in here. Let's say, I want to default to, let's say, $100, okay, to a customer. But when I purchase it from somebody, I have a reliable vendor that or a subcontractor that I purchase this from. He always sells it to me for $55, let's say, okay. I can always change these on the fly when I create these documents, but these are just default items. Has nothing to do with your financial reports, okay. It only has to do with, it only affects your financials when you actually use them, okay. But again, you can change these on the fly, so it just helps you, okay. If you're always buying and always selling for the same price, and you're selling hundreds of them all the time or thousands of them, and extreme examples, and yes, I mean, these defaults right here really do help. And once I'm finished here, and I'm just going to click on Save and Close, okay. And that is basically it. Let's move over to the QuickBooks desktop version here and see what this particular company's item list looks like here. Okay, and to get there, we just go to our list right here, and instead of saying products and services, it just says item list. Okay, let's go ahead and click on that. In this particular company, if we look at the type of items right here, again, they have services, they have inventory parts, okay, just like in our QuickBooks Online example. But also in our example here, we have inventory assembly. Assemblies are just taking your parts and you're building something. If you're building a computer, okay, you have the motherboard, you have your memory boards, or your memory chips, I should say, or whatever. You have your monitor, let's say, okay. You have all the different components that can make up a computer or make up a calculator or a cell phone or something like that. So you're going to have lots of little parts right here to make up an actual assembly, okay. We also have, in this company's example, we also have non-inventory parts as well too. Non-inventory parts are items that are they're products, but they're not warehoused anywhere, okay? You're actually buying them on the fly, let's say for a particular job, okay? So if you're always having to go to a place like Home Depot and purchase, materials, let's say, but you're not going to warehouse them. You're going to use them right away. That's fine, and that keeps everything clean. It's just going to be expensed out right away as soon as you buy it. And that's it. You're not going to store it anywhere, because if you store something, in the case of inventory, then in your financials, it's not expensed out right away until you sell it. Okay, so you don't take that expense deduction until you sell it. Always remember that. So when you create the world of inventory in your bookkeeping file, just remember what you're getting yourself involved with, because it will dramatically affect your financials if you treat it incorrectly. Okay, I would advise to do your research or get some professional, consulting, dealing with inventory and just getting some inventory management consulting before you start investing into inventory software, or activating the inventory module in QuickBooks. So you have to really understand that, because when you're dealing with inventory, you can see the total quantity column all of a sudden becomes alive here. In this case here, it tracks how much you have in stock. These 16 items that are in stock, they are not expensed out. They're just capitalized. In other words, they're thrown into an asset account. Which asset account? Well, let's double click on here, open it up, and here is your asset account, inventory asset. Most QuickBooks, or most files that I see, they keep it pretty simple as far as inventory asset management. People just have an inventory asset account. But the real attention is focused later on cost of goods sold. Some people will have different lines of cost of goods sold depending on what inventory is selling. And then the same thing when things are sold, inventory is sold, they have different types of income accounts as well. Okay, so when you purchase inventory, it all gets thrown into an inventory asset account. In this case here, they have 16 in stock, okay, at this moment. Average cost throughout the life of this inventory has been they've paid $308.51. Okay, that's just an average. So later on, when they start selling these 16 items, it's going to take the present average cost and it's going to multiply it by however many you sold in a particular transaction, remove it from the inventory asset account, throw it into the cost of goods sold account. Okay. At the same time, it also based on how much you sold it for in the particular invoice to the customer, it's going to throw that number into an income account as well too. As I explained earlier, these numbers right here don't affect your financials until you actually use them. And again, you can change these on the fly. Okay, for cost, this is default cost account. Okay, for this particular item that you may purchase from somebody. Okay, in other words, a vendor. Okay, and this is a default sales price as well too, your dream sales price or whatever. And so that's basically it here. Again, it's just paramount to understand the difference between inventory management and service management. When you go to a service type item, double click on it, you don't see these fields down here, okay? Because service items are very simple. Everything gets expensed out as soon as you pay for it. Okay, there's no capitalization unless you want to manually do that, but let's not get into that in this training session. So in this particular, you provide a service to somebody. I'm sorry, you're actually paying it if you want to pay somebody to actually, paint, because in this particular company file, it looks like it's underneath subcontractor. So this particular company uses subcontractor services for carpeting, drywall, on down the line, and there's painting right there. So they're paying somebody $25 an hour, for a particular expensed work right there. Looks like their ideal vendor is this, whatever that says, Washuta and Sun Painting. Now, when they actually go bill the customer later on for this particular painting work, hopefully they'll want to charge at least that right there. All right, or maybe even that right there. Okay, whatever it is. I mean, you may not want to set the default price because you could have your sales prices. It could depend on a lot of different things, So, but if you're always selling the same products, I mean, it's like, yeah, you'll want to, and you're selling thousands of them, in a month, and of course you're going to have this default right here. But, I mean, but this particular person, especially if he's a, home builder or something, I mean, this is just going to be a zero right there. Who knows what they've got worked out on the contract. But when they do sell it, it's going to go to this subcontracted labor inc. In other words, when they throw this particular cost onto an actual invoice, or when they just want to use this item on an invoice, whatever the case, direct bill, indirect bill, doesn't matter. The point is they're using this item on a sales transaction on an invoice, and they're going to choose, when they choose painting, then it gets thrown into this particular income account right here. Now, where am I seeing these accounts? Well, I'm assuming you know that, but if I just do a chart of account, this is where it all ties into right here. So here's my subcontracted labor income right there, okay, that we were just looking at. So anyways, let's get back to our item list here. And let's continue to scroll down right here. And again, we already discussed inventory part. We discussed non-inventory part. Let's discuss inventory assembly. Okay, as I said earlier, inventory parts make up an assembly. And I gave you the example of a computer, cell phone, and so forth. So let's go ahead and delve into inventory assembly. And again, we're just going to give it a name right here. And then here's our cost of goods sold accounts when we actually we want to cost it out later on when it sells, taxable, non-taxable, and then the income account right here, again, when we sell it, this one, but this particular one here, they decided to book it to materials income. So they have a bunch of different materials that make up the interior door kit. What are those materials? Well, here they are. Let's go to full view. Here's our bill of materials. Okay, so all these materials, this particular one, the standard doorknobs, takes one, okay, to build interior door kit. It takes one door, okay, to build that kit. How many hinges does it take? 3. And that makes sense. Thinking of a door right now, it's always got 3 hinges. Anyways, and then door frame 1 as well, too. I mean, it is what it is here. And so just like we saw in inventory parts, here is our inventory, our special inventory section right here. Again, we don't cost these out until we actually sell it, okay? Right now we have 20 of these kits on hand. Our average cost has been $100, okay, $100. So it's going to use these numbers right here to actually, to expense to our cost of goods sold later on, our cost of goods sold account later on when we actually sell one. At the same time, of course, hopefully our sales price is more than $100, okay? So we can make money. We can be profitable, okay? But in the meantime, these 20 are just sitting here in inventory asset, okay? They're just parked there until something happens with them, okay? We've already built them, okay? And that's basically it there. So let's go ahead and cancel out of this one. Let's move on down the line here. Inventory, I'm sorry, non-inventory part. We've already discussed those. Excuse me. These other charge type items are not typical, how should I say, not part of your business model. Let's put it that way. Okay. If you just have to charge somebody for something, that you've had to incur, such as, let's keep it simple here. Let's just go to bad debt, let's say, okay? Delivery charges. Well, bad debt is just, that's just for your own internal use when somebody's decided they don't want to pay you anymore. So you need to write off that invoice and you want to book it to bad debt, okay? Delivery charges is a popular one there. You're charging or being charged for delivery charges, okay? Rental, finance charges, permits, that's another big one as well too. So this in retainage. So these, may or may not be typically, these are just, again, these are not a service or a product that you sell. Okay, this is just another item or, that you have to throw in on bills and invoices for just vast different reasons. Okay. Let's move on down the line here to subtotal. These are just items that you can use. You don't have to use these, but on bills and invoices, when you want to subtotal something, if you enter 5 items in on an invoice and you want to subtotal it for whatever reason, you can use a subtotal item. Okay. Let's move on down the on the line here. And let's take a look at group items. Now, group items are items that, as an example, if you want to, this example here, they say custom storage building, okay? So these are almost like one-offs in a way to where you're taking items that you can typically sell on their own and you want to make a group item. I have a better example. If you were building gift baskets, let's say, so you can typically sell wine and cheeses and crackers, and that's typical part of your particular business. You're selling those particular items. Let's say for a holiday, you decided to go ahead and make a gift basket. Okay. So you throw the wine and the cheeses and the crackers at a special price. That's where group items come in. Okay. You're not actually creating a computer. It's not a typical part of your business. But if you want to custom build something for somebody, then you actually use what they call a group item. Let's go ahead and double click on here. And so for this particular one, this particular storage shed here, the item that they're using is just lumber right here. So this is a non-inventory part, okay? And then they keep it really simple. They just say labor, okay? So this is a particular, this is not the best example really. I can think of better examples, but anyways, the cost of goods sold, bookkeeping in the background, everything is different. But again, group items, there's just some misunderstanding as far as, well, what is a group item and what's the difference between that and an inventory or assembly item. And again, these are just kind of one-offs right here and the example I just gave as far as the gift basket goes. Discounts. If you want to give somebody a discount on an invoice, there it is right there. Okay. And then same thing if you want to recognize a prepayment, let's say, then there it is as well too. The last one here is going to be what they call sales tax type items. Okay. They've got to be the most misunderstood and most misused misused of whatever in bookkeeping in QuickBooks, because you actually can once you activate the sales tax module in your QuickBooks file, you can create sales tax items. You can use a sales tax module to actually run reports, run your sales tax liability reports, let's say, and to actually book your sales tax payments through and also to the correct taxing agency. Okay. Most people are running across, they don't use this correctly. Okay. But anyways, so these are sales tax type items. Let's go ahead and double click. This one here is a city tax. Here's your rate right here. And the tax agency we want to use, which is very important. This one here is City of East Bay Shore. So pretty simple looking right here. But, you know, again, these are just, these are not typical part of your business. You don't have to use these, but again, it's just the use of it and using the corresponding correlating sales tax module in your QuickBooks file to know exactly how much sales tax you've collected, what to report to a sales tax agency, and how much to pay. Hopefully, it matches your books as well, both in your liability for a particular time period and the amounts as well too. I mean, I shouldn't say I guarantee, but it's usually replete with mistakes. Let's put it that way. Anyway, so those are your. Now, if we want to go ahead and create a new item, let's say, okay, so let's just go ahead and create a new item. You can just go ahead and go to item right here. A keyboard shortcut is just going to be Control N, okay? Or we could just go to item. We can just go and click on new, okay? So these are the typical items. These are all the items you can create here. We just went over, I think, all of these here. And so, here, if you would just, I don't know, inventory part, let's say we want to create another part. Okay. So, keeping in the moment here with our sample company, let's just say garage door. Okay. So I'm not going to worry about a sub item of our unit of measurements. This is something that's going to be a different training module. I don't want to delve into this now, but this is imperative to understand this. If you buy something in eaches, let's say, but you bundle up and sell in a case, your QuickBooks file needs to know that, okay? Or if you buy something in cases, break it down, sell into eaches, your QuickBooks file needs to know that. Otherwise, your profit and loss will never be correct, and also your stock statuses will never be correct either. Okay, so let's not delve into that now. Our description, I'm just going to keep it the same. That's fine. Garage. I don't think I'm spelling it right, but anyways, garage door. And then notice how I tabbed it automatically populates the sales tax. So I'm keeping this double-sided right here. I'm just going to pretend that I'm buying this from somebody and then I'm turning right around and selling it. Okay, so when I purchase it, let's say I just want to keep a particular cost. So let's just say, I don't know, $550, okay, for a garage door. And then I'm just going to keep it simple, cost of goods sold on my preferred vendor. I really don't know. I mean, I'm just going to, whatever. It doesn't really matter for our, let's just say, whatever, this guy right here sells garage doors. So it doesn't matter. Anyways, I'm just going to make this, I will make this a taxable item. The income accounts, I'm going to go ahead and book it as, looks like materials income. Okay, so when I sell it, it's going to go to that account right there. Okay, you definitely never ever want to populate the on-hand amount right away. Okay, because it's going to go to your opening balance equity. You don't want to mess with that at all. Okay, the proper way to actually start populating on hand is, of course, never use this particular, let QuickBooks do this on its own, okay? When you actually purchase these from vendors, it's going to populate this on its own right here, okay? That's the way you want to bring in inventory, okay? You never want to just say, oh, by the way, I've got 10, surprise, because QuickBooks is going to get confused, not know what to do with that. Surprise, opening balance equity, and then surprise to your CPA later on as well too, okay? So don't ever manually populate any of these right here. Let QuickBooks do it all. And then here's your inventory asset account. Just keep it simple. Just keep it. You can create another asset account, but whatever. Inventory asset is fine. And that's really it. That's just the basics of creating an inventory part type of item right here. Click on OK, bam, there's our garage door right there. Okay. Anyways, I'm going to go ahead and sign off for now. Again, there's a thousand other things I can be talking about, but again, I just wanted to kind of give you a rough idea of items for a business. Okay, definitely email me anytime, David at 123books.biz, for any questions or comments. Thanks a lot.